Welcome everyone. Usually doing my normal video every night. What I decided to do, since all the craziness is going on after President Trump's speech, that I would just do a live show. Anyway, welcome. There's a lot going on. As those of you that were watching the futures trade for a while, we're down over 4%. We'll go through a number of things here, but I think to get started, we need to just discuss briefly, get a setup here going, and then we'll go into, I'll do some presentation. You guys have questions, we'll answer the questions and go that route for right now. And I know some of you folks are in different time zones. Appreciate you coming and watching the show. So one of the things that is important, I think, to understand is what we're seeing here. And we're seeing, I don't know the best way to put it. I'm trying not to get into any kind of conspiracy theory here, but they are shutting down the world economy. The NBA announced in the last hour that they're shutting down the season. You know what the revenues on this means? This is a major hit to the economy. There's things like South by Southwest in Austin. Doesn't seem like much, but just the tax revenues to the city of Austin is $315 million. So you can imagine the money being spent if that's the taxes. So it's about 10 times that. It's a huge event. And, I want to discuss, I talked about in the live show I did earlier today, but this national debt situation is really going to come into play, and we'll look at a number of things here. So I've got most things loaded in on my other monitor I'll be able to bring in, but this event that we're seeing is so impactful, so huge to the economy. So let's face it, they're rolling this thing over. And what you're seeing, I actually run some money for family members and stuff like that, and basically liquidated everything, even the muni bonds. And if you looked at what happened to muni bonds today, it was absolutely devastating. There's some ETNs that have already had catastrophic events, and they've been shut down, especially some of the inverses out there. There's Barclays runs something called DTYS, and that actually got shut down. Many years ago at a conference in 2010, I had a guy named Hugh Henry come on, and he was talking about how dangerous these ETNs are and how dangerous ETFs in general are. And we're seeing this complete meltdown. You're hearing from everybody. I'm hoping that a lot of folks that are on this call have at least done something. If you're following BPM methodology, you should be in cash or substantially in cash, greater than 60 or 70%. And that should have been happening. I'll show you a couple things here on the website, because since January 31st, we have been sellers in this market, just gradually working things down. Now, some of the big indexes and things of that sort rolled over all at once when the big collapse happened. And that's why I constantly preach doing individual symbols and all that kind of stuff. So let's take a look at where to start. Let's start here. Let me bring this into the screen, and let's talk about the national debt. And I've referenced the event in Iran that happened last month when they attacked, they made the attack on one of our bases. Oil spiked, but what it did was illuminated what was really going on in the crude oil world, and it was that there was oil everywhere. When events like this happen, what you see is everything, the focus of the market players start to shift. And I talked about this on videos a couple of nights ago, that psychology has changed substantially. And what's happened here is now everything that was good was looked at, and everything that was negative or maybe really mattered in market metrics were ignored prior to 3 weeks ago. And maybe we'll go out as far as 4. Now this is in focus, and I've been talking for years about when does $23.5 trillion of debt matters, and maybe it matters now. And with what's going on with these events, you're going to see more of this stuff. And my biggest concern is that you've already seen some events in New York State where they're locking down cities, and that could be a real factor. You start getting people going crazy and martial law starts to come in place. And I just don't know where this is going. The whole idea that President Trump talked about blocking virtually everything from Europe, packaging, anything that's being shipped in from Europe needs to be looked at. Nobody's coming in after, I guess it's Friday. So the bad news of that is they got 2 days to get on an airplane. So, I think it'd be maybe immediately would be a better idea maybe, but that's not me to decide. But the bottom line is these are drastic measures, and there's a number of things that I've been arguing that this virus isn't nearly as deadly as our flu that we have every year, our seasonal flu. There's a flu, I forget what exactly, it's influenza type B, I think, has killed 136 children in this country already this season. No one's shutting down schools or doing anything over that. And there's, I think, close to 12,000 people have died from the normal flu we have every year this year. That's more than it's died in the whole planet just about on this coronavirus. So I think it's overblown, but it's being played out to a major event. And I'm going to say some things, like it or don't like it, it's okay. I really feel like what we're experiencing is almost World War III, a financial World War III, and it was instigated by China. I believe that China got their ass kicked in the trade war. Their economy was declining. Meanwhile, the U.S. economy was going vertical. And we all know where this started from, Wuhan province. I'm not going to go into a lot of that, but there's definitely something going on here. And the reason why does Iran have so many cases? Because that's the only trading partner they have is China because of all the sanctions. So it's really easy to see everything that's going on in the world here and the level which the players are putting out. So maybe there's something to it, but there's certainly panicking people. President Trump's speech did nothing good for anybody, but even heightened the alarm even more. And so anyway, the point of even talking about this is this now becomes a focus. Everything bad, all the debt that we've talked about, from student loans to you name it, all the corporate loan debt, everything. And I talked about this earlier in the show, and I'll try to unpack this as fast as I can. But by the very quick values that have changed on stocks have changed the metrics of what companies are going to be able to do. Just like 2008, there's a lot of companies that are down 40 to 60%. Everybody looks at the indices and, we're bear market territory, all that bullshit. The bottom line is there are companies that are absolutely getting crushed, and there's no way for them to come back. And there's no way for them to do financing. Everything's changed, and literally, we'll call it in the last maybe 5 trading sessions, maybe 8. So the entire metrics of everything that's measured has changed. It's not everything is not the S&P 500, and it just frustrates me because the world that I live in around the advisors and people like that, they think it's all about ETFs and indexes. Well, it's not. It has everything to do with corporate finance. It has everything to do with earnings, and it's not just baskets of stocks and pie charts. And what we're going to be focused on going forward is something much bigger. It's going to be all the ugly shit. I don't know how else to put this, but this is the stuff that's going to be impacting the markets. It's not about allocations. It's not about figuring out where the bounce is going to happen from. There's something bigger going on here. And every day that they shut down, think about the television revenues. Think about everybody with just the NBA. What else are they going to shut down? there's a big event in California called Coachella. I know I'm not a millennial, but I have millennials who work for me, and I know what this big event. People operate their entire lives around all this stuff. So there's going to be a lot of impact on the economy. Okay, I think I sunk that putt. I'm going to make sure I have a view of the screen. And thanks, Nick, for the question. So I'll answer a couple questions before we move on, look at some charts. Is it too late to raise cash is the question. And, that's a tough one. I can tell you, I mentioned I run some family money, and even the muni bonds I've thrown out in the last couple of days. As far as being down another 4%, is there? I thought this thing was going to hold. We're going to go through the charts in a minute, and this news overnight is just rocked the world. And I mean, think about, we're talking about the NBA and TV revenues and all the stuff around it. Think about the revenues that are going to be interrupted from international trade with the EU. That is something that's, I'm not even sure how you measure that, but that's why you're seeing the markets do what they're doing. So let's go ahead and pop over and take a look at the markets, and we'll try to talk. I put up something. This is a 1 minute E-mini chart, and these are actually real-time models running on a 1 minute graph. It's went long. It's going long and short. You can see up here it's shorted, but I just thought I'd put this model up there just so you can see exactly what's going on. It's real time. What I want to do is I'm going to go over and we're going to disable this trading model for right now. And we're going to go and take a look at this. We're going to go over to the cash S&P, and this is a 1 minute graph. So let me get a time frame. We're going to look at daily. This is how it's set up today. Yesterday I talked about. So this is still, hey, Nick, this is still trying to answer your question, so if you're wondering. So what's happening here, I had advertised, I did a video about 4 or 5 days ago that this was an 87 style crash. Well, I happen to be a trader in 1987, okay? I'm an old dude. And I can tell you that there was nothing like that at the time. Black Monday in 1987 was a minus 22% in one session. And I don't know what we have. I had kind of a hot mic situation going on earlier. I'll make sure that gets taken out. But the bottom line is there is a lot of panic going out. And the conversation I was having was that will everybody that didn't get out panic? And I can tell you, I had a conversation with a professional that's that's not in our industry, had no clue, had done nothing. So these kind of events is finally starting to wake up the public. And I talked about this on a conference call I did for advisors a couple of weeks ago, was when a customer calls you up, I don't care what your strategy is. If a customer calls up, it's their money and tells you, and you're an advisor, tells you to liquidate, you sell it. And tomorrow could be potentially the big sell day where people just push that panic button. And, maybe 7%. We might see circuit breakers hit tomorrow if there's, I think everybody's sitting overnight. We're right now, we're about 4 hours away from London opening yet. But the reaction in London, especially, it's going to be really interesting to see what kind of action that we get once London opens. I have no idea what we're dealing with here, folks. All I know is that all of the numbers, all these accelerations, these PPMs here are telling us this thing is really going a lot lower. I'm going to bring up the future. So this is what this bar right here, I'll highlight it. That bar right there is tonight's action, and it's taken out yesterday's low, and we're all the way down to 2609. So going back to a video I did last week, that was titled, I think, 1987 Crash. Uh, if you look at that, I talked about going down to 2650, and this is even taking out and going below those numbers. So I'm going to try to, in this show, to talk about the absolute worst case, what's happening here, and do some price measurements that we'll come up with. And so you folks will bear with me because I may end up doing some calculations here just to come up with some stuff. I am going to put on a indicator that is a proprietary indicator, and I'll show you. This will project what where prices may be going. Let's just see if anything's coming up here yet. Okay, nothing on this downside, but we're going to go and look at the weekly graph. So, wow, this is pretty amazing. This bar here is tonight's. This is the weekly bar on the futures. We've just taken out the 200-week moving average. And I want you to notice all of these PPMs here. The acceleration just never did. I actually had these indicators in 1987. We could go back and take a look at those, but I'm telling you, this is a full-out market collapse. And there's no way to determine where this is going. I'm going to bring up something else in a minute, but this downward acceleration is absolutely, I don't have any words trying to explain this is really difficult. So I guess a long answer, Nick, to your question is probably not. And, the reason why I've been telling advisors, even if you weren't a subscriber, used to be a subscriber several weeks ago, is raise cash, because this is something different we're dealing with. This in 2008, at least initially, okay? In 2008, it was a money crisis. We ended up knowing what was going on. People call it a black swan, but I called it in 2007. I was ahead of the thing. I talked about what was happening, and it was fairly easy for me because I came from the mortgage side of the market. I used to work with very large mortgage bankers and hedge their pipelines. So when I saw what was going on with the mortgage market back in 2007 when Bear Stearns failed, I figured out right away everybody had the same trade on. And actually what you're seeing again is everybody has the same trade on. What you're seeing is absolute failure of passive investing. This is everybody has the same ETF. I was just in San Diego 3 weeks ago at a T3 conference. I was at the Schwab conference in November, and I talked to a lot of people. I say, everybody, this is the most concentrated trade that there's ever been in my 42 years in this market. Everybody has the same trade on. So everybody owns Apple. Everybody owns all the same trades because they own SPY and they own MDY and IJR. They're literally, and I've talked to some people that do the portfolio performance when I was in San Diego a few weeks ago. And they were confirming what I'm about to say to you is there's 12 symbols that virtually every advisor in this country, I don't know what the trillions of dollars is. I mean, Charles Schwab, between Schwab and TD's got $5.5 trillion. And so everybody out there owns the same 12 symbols and a slightly different configuration of a pie chart. And so what you're seeing here is clients calling their advisors making decisions to sell, and I'm going to show you another chart. So I don't know how long I'm going to go. I'm just going to rant on this thing because if you want to listen to it, it's fine. I just think there's a lot to look at here. And what this concentrated trade, this is exactly Jack Bogle from Vanguard about 3 years ago, probably a year and a half before he died, was talking about this concentrated trade and how dangerous indexing is. And he's the king of indexes, okay? He saw the danger in this, and now we're seeing it unfold. I've watched with my business and being an active environment and always promoting to do individual stocks. I've seen almost everybody go back to passive investing and pie charts and talking about long-term targets and all this. I believe what we're seeing here is a very long-term. I've talked about last couple of years this catastrophic top that's going to happen, and this is going to be a long-term top. This thing's not going to come back. There's no hot bounce going 2018 and we're going to come back screaming and everything's going to be okay. There's no way that for that to happen. If you remember in 2018, there really wasn't anything going on. You know, it was one of those things. 2016, this was the 2018 low. Right here, I'll put a cursor on it. So I'm going to show you a chart, and this proves the theory of what I'm talking about with this concentrated trade. About 6 months ago, I was talking about the next rotation when the market went higher, as it did, that the rotation would be in to the small and mid caps, and they would lead the way up to the final leg of this market. Guess what? Really bad call, but it never happened. I'm going to show you a chart here, which is literally illustrates that chart. This is a longer term chart. And this is, I believe this is, let me just check the, I've got to check some data here. Make sure I get the right symbols here. So this is IJR. So this is small cap versus the S&P. And even in this decline, everything's collapsing here. And so when we come out of this, folks, those of you that knew me in 2008, I see names on here that I know were hanging around. I told you then that a value growth blend multi-cap strategy was the way to come out of 2008 and 9. And that thing just kicked butt. You guys know it. And those folks that did that were amazing. Well, I'm telling you again that when this thing bottoms, it's not going to be Google and Apple. There's going to be trades there. But this market's going to have the most value, period. So small and mid cap are going to be the play. And we'll talk about that when this carnage is over. But those are going to probably be the play, but you're going to have to be really selective because of the capitalization and the finance situation we talked about. Let's just hope that this thing actually stops really quick here. Let's hope we do get a bounce. But these charts here are just not helpful. So back over to. So let's look at the monthly graph. And this was a graph I spent some time talking about on a live show today. And what we're looking at here is the 40-month moving average. And now these are the futures, so we can see what tomorrow's likely to look like. We're down right now 4.44%. And we went right through this average. And you can see, and I talked about this on the show today, all these PPMs have crossed to their first and second derivatives, which tell you there's a major trend change happening. So even when this thing consolidates, it's going to do, whenever it finds the price low and there is a bounce, there's some stability comes in, the next rebound, if you ever, I don't know when you'll see 3,000 again, but if you see 3,000, it's probably going to be the point where you're going to want to sell. But not to get too far ahead. But basically, I think this thing could go down. I talked about this a while back. We could see this market not in this sequence, but as low as that number you see right over here at 1610. So you could go to 1,000 points on the S&P over the next, let's say, 2 to 5 years. Now, I don't know. Maybe that means Bernie's going to get elected. I have no idea. But the fabric of this country could change very quickly over this coronavirus. And I know Jake, who's on the line, has been telling me we're all going to die, and this thing's going to go exponential. I hope that's wrong, but anything that's happening right now is creating the panic. It's shutting things down. Air travel. How would you like to own a cruise ship company? Or how would you like to be the guys that started a brand new offering of ETF. I saw some guys on CNBC celebrating their brand new ETF. Call them up, see how that's going for them. They're not getting any traction. Nobody wants it. And so the other thing that I'm on a rampage tonight, so I'm just going to go with this. The other thing you're going to see happen is mutual fund companies are going to start closing. They were already losing bleeding money. Now they're expensive. Charles Schwab changed the world from the standpoint of no more tickets and all of that. So when that all happened, mutual funds became amazingly experienced. I joke with when people I talk to is mutual funds are like cigarettes in a no smoking zone. They're just way too expensive. So that's why we've seen the world move to ETFs. They have a lower internal cost, but they also have a different way to execute. You're not stuck to that one price at that NAV at the end of the day. So those are the things that that are really concerning to me. So we're going to see mutual funds start to implode. I put up LPL stock earlier today. That thing's almost down 50%. I think it goes a lot more. There's going to be the other concept here is that what we're really seeing is a dislocation of capital. So when these type of things happen, capital gets vaporized. It's not like we're looking at the futures markets. There's a buyer and seller on each side. When people liquidate these stocks, there's capital being vaporized. The balance sheets on all these companies are decimated. And if they don't come back pretty quick, like I said before, the financing, everything's going to be pretty tough. So I actually have the indicator. There is no downside objectives as of yet on this thing, but this is something I'll be talking about over the next few weeks. How this pattern sets up, probably on this intermediate chart, is going to be something to look at. So here we have nothing yet, even on intermediate chart. So this is going to have to set up. This thing has, if it does not bounce here, then it's going at least to 24, somewhere between 24 and 2200 here. This, you can see these little dots I've just put a cursor on over here. These were old projections off of this pattern on the downside, which were suggesting 2324, 2081. Something like that is going to come into play, and it may even be worse. And so let's carry this one more step further. So all this stuff happens to the companies. We get into this CDS game again with the credit default swaps, and companies start being looked at that they're going to fail. Then the next phase is the banks start to get scrutinized, the national debt, everything starts to pile on. So this is the ultimate catastrophe. And as you can see, Trump talked tonight about tax cuts, doing all kinds of stuff, payroll cuts, and I said this several weeks ago, those of you who've been listening, is that money can't fix this. You can put all the money you want. The Fed could come out tomorrow and lower the Fed funds rate to another 50 basis points or another 75, and they could say we're adding $2.3 trillion of new money in the market, and it's not even going to make a hiccup. It might make a hiccup, but it's not going to solve the problem. I hate to, it comes down to, unless the Fed comes up with a vaccine for this virus, it's not going to fix anything. So this is not a money situation. It's an absolute confidence, and this is going to break the confidence of everyone. And I commend all of you that might be on this call that stuck with VPM and followed the process and have a lot of cash right now. Your customers are going to love you just like they did in '08. As far as being in cash and being in a passive position, it's going to be really tough. There's going to be some tough decisions. I talked about this 2 weeks ago. I thought it was tough. This is really tough. And, so the risk of doing something at these levels is that the market comes back and you think, gee, I should have stayed. If I would have stayed in, then I could have got out at a better price. All those questions are going to come up. And this is a problem when this is a reaction uh, to something. I want to show you one more thing I want to go over to our main website here. One second here. All right, I'll bring this over on the screen here. So what I want to do is go to the overview page, and I want to show you what's been going on with this chart here. So this chart in the middle that I'm blowing up really big, this is our process run. This is just on individual equities, but it's showing you when markets are going up. This is participation, a number of stocks participating. And what I want you to see here is on the 13th of January, we were at 67%. The following week, we've been steady selling this thing down. So as the peak happened here, as the market was peaking, we were selling into this thing. So a lot of folks were already in 20, 30+% cash. A lot of these big mutual funds and stuff rolled over on the big collapse 2 Mondays ago. That was when we got the sell signals. And that's when that moved down. Let me change this over to mutual funds and you'll be able to see that. Okay. So you see here, this was 73%, next time 36%. So all in one tranche, everything got out. And if we go down and look at some of these other funds, look at these different funds out there. You can see that most everything, aggressive allocation, all these are down in 10, 20 percentile range. There's not a lot of things very, very long here, but look at what is long. The muni bonds have been pegged. And I want to bring those up because they got hit today. And I'm just going to, I don't know how long I'm going to go on. So if I see you guys give up on me and start to give up, then I'll stop talking. But the realities is that one of the things that could also come into play, and this is why I sold a lot of muni bonds, because what may happen here is that the states, so the revenue. So I mentioned Austin, Texas, $351 million worth of revenues. What if you had revenue bonds that were Austin, Texas bonds, or if you had they're a tax-free state, but let's go over to any other state and take a look at that. What's going to come into questions, let me show you some couple munis here, what happened to these things. So this is a weekly graph. You can see these things just fell off, but let me go to a daily. I want you to see the daily ticks. This is a not the other one I'm going to show you is a high yield, but this is, you see one tick where the hand is here, and then the next tick down. We literally went, in a handful of sessions from 12.35 down to 12 on this thing. And this is a huge move. You can see how this fund usually trades, and you also see these PPMs just the collapse, just like we've seen on everything. And it's interesting. This is one of the ETNs that blew up. This thing blew up because they ran under capitalization. They couldn't keep the fund up. They were still talking about doing a reverse split to keep this thing alive. But meanwhile, if it was trading, it would have been probably at $8 or $9 because of what happened in treasuries over the last couple of days. So this is treasuries, going to bounce around a little bit. And you can see they come up yesterday, last night's video, I talked about these things getting back to fill this gap around 9%. We're getting pretty close to high. What was the high here? 840, I think. I got to bring this other. Yeah, so the high was 862. So we almost filled that gap. Let me see what the bottom of the gap is 899. So I have no idea with everything's going on where there's going to be, where the treasuries are going to come into play. But I'm telling you, all debt could become very toxic, whether it's municipal bonds, even treasuries. There's going to be a liquidation. I talked about this earlier today, is that what you're seeing is an asset liquidation. 2008 style is where we're going right now. People are just trying to raise capital. So I don't think I ever answered your question, Nick. I don't know if you're still on, but it's going to be really, really hard to make rational decisions at this point in time. But the risk is that everything gets better, but it doesn't look like that's where we're headed. Since just on Friday, this we'll call it it's not really a boycott, but the stoppage of travel between Europe and the U.S. This is a major event. That's never happened, best of my knowledge. I could be wrong, but I don't think that's ever happened. And so that's pretty much everything that, let's see here. I'm going to go and look at questions. I've just been babbling on here, so. Okay. So it's funny. Actually, it wasn't millennial investors. It was actually baby boom investors that got brainwashed by MPT. And let's see here. Can't be, okay. Anybody? Thank you, Jake. No old brokers, just Bob. Anyway, anybody got some questions? We still got, couple handfuls of people on. So if you have some questions, let's ask. I'd like to cover some things that maybe make sense for you. I'm trying to think if there's, while I'm waiting for a question. Gold. Gold continues to be under pressure and will continue to be under pressure, should go to $1,600. I talked about this in detail earlier today. If you watched the previous live video, this is a correctional pattern, but even something bigger potentially is happening, that gold is even rolling over. So some comments by some folks that are big gold bugs. Everybody, well, not everybody, it's somewhat common knowledge that during the Great Depression, the gold was a play through the gold mining stocks. They actually, I think Hecla Mining made its all-time high in like 1933 or 37, somewhere during the Depression. And every era is different. I hate to invest by looking in the rearview mirror what happened in 87 or anything. But there's just this is just going to be a general liquidation on everything for now. I don't know that there's any winner. People are always asking, what should I buy? So MBAC, what was B shares of New York Life bonds? If you have a symbol, I can put them up. We can take a look at it if you know the symbol. I always joke I'm not Jim Cramer. I don't know all these symbols. But the bottom line is this is asset liquidation. I've talked about it. We've got Bitcoin's down 247 right now. They're getting hammered too. Everything that's an asset that can be liquidated is being liquidated. There's nothing out there that there's no safe haven. Possibly, I put this chart up earlier. You could go and buy some Japanese yen. That's been one of the safe haven trades. But I'm not sure, other than buying the futures or buying some ETNs that are currency based, that's about the only currency at the moment that you could actually buy. So, yeah, I don't know if someone can, let's see here, GDXJ. Let me put that up. Oh, that looks like a fun chart. Okay, yeah. So Jake said maybe M. Beck is talking about um, annuities. Yeah, that's the other thing that could get challenged. Some of these guarantees on annuities. I'm not an annuity fan. Um, it's just been, yeah. Boy, I wish I knew. Uh, well, that's Steve Levinson. Thank you. That's a great question. It kind of triggers some things that we could talk a long time about. Will the bank buy my business money in a bail-in? Um, if you guys remember, and I know this is why you put this up here, but if you go to Greece, I've talked about capital controls could be next, and once they put, um, yeah, I'll finish, Jake. Thanks. I'll finish this GDXY. But anyway, if we get to the point where some of this craziness that I've talked about tonight actually happens, this is going to be this will be the next event. So you have some sort of measure of martial law. The fact that Trump's telling everybody if you're sick, stay home. I was talking to someone earlier, and think about this. Going to a hospital would be very dangerous if this thing spreads because the hospital is going to be a giant bug farm. You're not going to want to go there. And that's exactly what Trump said today. If you're sick, stay home. You know, I don't know how, maybe they'll just start, there'll be a dispenser somewhere just to get COVID-19 meds. So anyway, just to finish this GDXY, this thing is breaking through its, this is a 200-week moving average. Uh, yeah, this is the gold miners. Yeah, so this goes to the story is that gold, they're just taking everything down right now. This is not the 1930s, and this is Jake. What's your buddy that I follow on Twitter? Jim Rickards. He's talking about gold, and this is the place to be. It's not. It's not going to be. And I've been a big bull on gold in the last couple of years, but this event, because of the liquidation that's happening, at least for now, is all game off. This is not the kind of pattern that you get bullish and they're going to go into all-time new highs. And everything was looking wonderful. So I think um, let's go. I think M. Beck got me a symbol, SVM. Let's do a couple of those. SVM, oh boy. Yeah, so PPMs are off the map, down 6%. If you own these things, it's hard to say to sell this stuff at these kind of prices. Um, I'm gonna put something up here real quick here. Yeah, even the models. Let me take off these shorts. That'll skew things a little bit. Yeah, so this thing got whacked on this. It sold on the open. It would have sold the open on 2/7. So February 7th, this was an exit. This one, the models, they bought it down here and it's out. So same thing with all these markets that are breaking their 200-week moving average is they've got to find that equilibrium where the bottom is on these particular things. Let me just see if there's we're getting quite a few. See if this works. Is it PAAS or just yeah? So okay, this is interesting. I'm not sure what these are. It's not giving me a description. It's Nasdaq, but we're right here on this 200-day moving average. But this is probably not going to matter tomorrow. We also got we bought over here. We had an exit. We're out of this symbol on the open on this day. So what was that? Once again, 228 was the exit there. So it's not anything going on. Let me see what else. Yeah, Cyprus was the first. Thanks. Cyprus was the first one. That's what I was thinking of. Yeah, they did the bail-in. And the other thing is, I'm all over the place, okay? But whenever you get these, if they put any kind of controls on capital, what's going to happen here is you're going to get, it's sort of like the utility company, okay? Once they raise the rates on electricity, it never goes down again. I used to have a lithograph that was on my wall. It had a guy standing in the corner, or he went into post office and he wanted to buy futures on post office stamps because they only went one way. They went up. They knew he would win, right? So it's the same thing. Once they put capital controls on, they may modify them so you can get more out, but once they've done it, they don't take them off. There's still some capital controls and things that are in place even in Greece yet to this day, and it's been 2011, 12 when that stuff was getting kicked in. So that was yeah, that's pretty good. Let's see here. I'm just trying to look through some of these comments real quick. Yeah, SIPC. SIPC has always been a joke. If you go back to 2008 on this insurance, on the brokerage insurance, if the Fed had not decided, if they had not decided to bail out AIG, for all of the overage insurance on the brokerage accounts, like I know LPL, for example, AIG was the insurer and all that. So if AIG would have went out of business and would have folded, then all those insurance contracts would have went bye-bye. And it's interesting because of everybody that got bailed out, they got the money back and went to they recovered the money and paid back the borrowed money faster than anybody. They were pretty amazing actually how they turned that company around. Let's see here. We got a lot of questions going. Okay, so I guess what you're saying, Beck, is that that's a Brazilian gold mine, that PASS. Yeah, all these metals in trouble. Let me look at some of the other questions around real quick to see if there's anything I missed. Yeah, okay. Jake's hit me with 60/40. Yeah, I'm gonna bring some other software up. I'm gonna bring up Portfolio Expert. I did a video. There's a video on my channel. It was done probably last year sometime, and it was called "Why Advisors Should Never Use 60/40." And the other thing that I guess I'm in a troll mode today is things like Riskalyze and these so-called metrics of risk for clients are the biggest bunch of bullshit that's ever been sold to anybody. These guys figure out how to suck $150 off of so many advisors. It's crazy. I predicted about 4 years ago that when the market blows up, all the customers that said, oh, I thought I was a 45, because the 45s are turning into 85s right now. They're blowing out all the metrics. That entire system, I won't say any more than this, is based upon a single factor of a standard deviation. And it's all based off of what happened in 2008. You look at when they started, and there's not just me, but others. We completely reverse engineered that thing. It was so simple to come up with what they did. And they've sold it to brokerage firms. And now what's happening is all these people are out there thinking your customers, if you're an advisor, are thinking, oh, I'm a 45, I did low risk. Well, wait, I didn't think I could lose this much. And that's the danger of what's happening. So I don't know where we're going, guys, with all this stuff, but I'm just going to keep on rambling on for a few minutes. I'm going to bring up in a minute. I'm putting up on my other monitor, and I'm going to Jake triggered me into 60/40 mode. So I'm bringing up. Bear with me just a minute. So I'm gonna bring this up. So I'll bring up our software just so you can see this, and we'll talk a little bit about portfolio design and other kind of stuff. We'll just go on until we get tired. I think YouTube will let me go 3 hours, and I already had an hour with live trading. But 60/40. So this is a 60/40 strategy, and the good news is you think the 40 should be doing pretty good, but the 60 is not doing very good. 60/40 strategy right now is down 10.5, but when we compare it to the S&P 500, you'll see the green line is the S&P 500 60/40, and that's just going back to 2010. So if we go all the way back, let me just do an all. See, this goes back to 2000, so let me set this time interval so we can see what that looks like. We'll set it to 2000. And we'll go to 311. So we go all the way back. 60/40 looked pretty good until this last supper. I'm trying to figure out this. This is definitely something going on here. I think I set the dates wrong. Let me just go back 10 years. Yeah, I'm not sure what happened there with that calculation. But it's because the portfolio actually didn't go that far. Anyway, but you can see the difference. I actually built in, I'm going to show you something here. I'm going to take 60/40 off, and we took the Riskalyze. So I'm going to put, if you can see over here on the left-hand side, I'm going to put all of these on. Riskalyze 28, capital preservation. Let's see here. Pass it. I've got to open this up so I get all the right ones on here. So we're going to put, these are all the portfolios that are modeled within their strategy. And you can see some of the volatility that wasn't supposed to happen or already happened. The 28s, basically, if you had a customer in there for 10 years, never made any money. None of the 44s income didn't make any money. That is the orange line. The yellow line is 78. And then the purple line is the most aggressive, is that's going to be your 85 aggressive. Now, what everybody forgot to tell them, and in fact, that's, okay, this is the strategies. The purple line, when I put that back up, is the S&P. So the S&P was up as high as 200%. You have about 1/3 or less of the profits. So when you do, if I convert this back and go 60-40, the underperformance is terrible, and the downside risk almost isn't quite 1-to-1, but it's more than it's supposed to be. And so when we're looking at these type of events, this really comes into focus. And if you run like a really I don't have them on here. If you run an aggressive model, let me just put something up here real quick. Let me get back and make sure I get the screen, so if I'm not boring you guys and this is not what you want to talk about, it's fine. Just let me know. Hang on. Live streaming. Okay. Yeah, thanks. I did get the wrong index. You're right. Anyway, so so anyway, that's so much for Riskalyze. But what's happening is we're going to blow. Everything's based on the standard deviation. If we go 2 standard deviations in 2008, we went 2.5 standard deviations from normal. And when that happens, it blows up everything. This DTYS I showed you, they completely blew that ETN up. It just blew up. As a matter of fact, I read some things on that, and they are actually offering liquidation to people that own shares of that. I don't know what kind of prices they're offering. So anyway, that's what that looks like. Okay. But I was going to bring up real good. Let's see. Yeah, I don't know what the symbols are, Jake. If you know those, go ahead and tell me. I always joke Jake should be on here with me demonstrating. But the bottom line is, these type of strategies are actually a really good way to underperform and actually have a similar risk. So take a look at this. So the 28 didn't make any money. It's down 5.4. The 44 is down 7.4. The 58s are down 10.4. So you could argue that's better. It is. The 78s are minus 14, and the 85 down 16. So and that's the downside. The problem is the upside capture is so limited that you're still participating, especially in the upper 58 plus. You're participating in 60 and 80% of the downside, and you're not even getting 30% of the upside. That's the problem with this stuff. All right, thanks, Jake. So anyway. More questions, guys? We still got 10 of us hanging out. It's 9 o'clock West Coast time right now. Might be midnight for some of you guys. Pretty boring late night TV. Let's go back and look and see how the markets are trading. We haven't looked at that for a little bit. Let's go back over to my day trading page. So we're down 0.446, so pretty much right where we were. We're trading 26.18. Those are ugly numbers if we stay like this overnight. Like I said, when London opens up, this is going to be the real test. It's going to be the real test for whether we stay here, if they rebound, or if the reaction by the Europeans are even more drastic than what we're seeing here. That'll be the interesting things to do. Trying to think, I've covered a lot of stuff. Just trying to make sure I don't forget anything. This is going to be, if you want to watch this, it's going to be a long one. I'm actually going to go and edit it. I'll edit out the first hour. So we've been doing this for an hour. We've got 9 people. We're starting to fade. Anybody else got a question or anything? Steve, did I answer all the questions that you had? I'm just looking here. Okay, yeah, that's pretty funny. Um, yeah, and Beck, I kind of agree. Virus is all marketing cover up. Repo market, September it started to get exponential. Um, I've been arguing, and Jake knows I've been arguing with him for a while, or we'll say debating, um, that the repos were pretty normal in the banking system, and the banking system has gotten so big that I grew up in a time when right after Jimmy Carter, I started in the markets uh, when Jimmy Carter was still president, and when Reagan came in, interest rates were the opposite of what they are today. Instead of being basically close to zero, they were 16 to 20% in the first quarter of 1981. And so, um, there's there was I forget where I was going now. Maybe I'm getting, let's see here. You know, hey Jake, if you're watching, look at Imbec's question. I almost, I'm serious. I'm about ready to have you call in and talk to you about this because Jake and I were talking about this. And what's the name of that video that you've been trying to get me to watch, and I keep not having enough time? Jake, if you see that, put that in there. The road to something. There's a video out there that talks about the effort by the Fed and others to do just that by remonetizing gold. Would that help? I don't know. You know, maybe, maybe that's it. I don't know. Yeah, Jake, if you get it, I'll try to find it on YouTube and I'll put the link in the um, I'll put the link in the chat. But anyway, yeah, things are going to be pretty interesting, folks. If you have exposure, like I said, we moved even muni bonds out to cash. I'm telling people in the last several days that this isn't, you don't need to be involved in this. Don't be. For people with income, if they've got enough capital, they can do without for a little bit, whether it's a couple months. I'm glad this came up because one of the other things that could happen is like I talked about a little bit on the muni bonds. If these states start to really get questioned, they could just crush these muni bonds. So there's going to be municipal bonds are not going to be a safe haven either. I've said this several times during this hour, is that there is absolutely no safe place at all. The safe place is in cash, and if you could, maybe you put money in Japanese yen. But who does that? Nobody, for the most part. Pretty much an institutional trade. And yeah, this Road to Ruta is there's a channel that has a ton of great information. Yeah. So by the way, M. Beck, are you buddies with Jake? Anyway, but yeah, so I'm going to watch the video before the night's over. So in the chat, folks, if this talks about exactly this monetizing, going back to the gold standard, basically. I always heard that there was no gold in Fort Worth, so I don't know. Anyway, yeah, markets are still bouncing around. We're down only 4% now, so we just got a rally. You can see on the screen on the right. We got a pretty decent push up from the lows. The lows so far tonight have been 2607. We're trading 30, so very quickly this thing just popped. And these are 1 minute bars you're looking at. So these are not, these aren't day bars. There's 1 minute by minute. And I could really put something up here and we could do one tick and you'll see what this stuff, how crazy this stuff really looks like. So this is a tick by tick chart. I think it froze up when I switched it. See here. Yeah, now you can see what this thing looks like on a tick by tick basis. It gets pretty wild because there's no liquidity. They're going to bounce this thing all over the place. This chart here will make you dizzy. So yeah, Fed and Jake's talked to me about this. As the Fed has used comic books about gold manipulations. I don't know who Bo Poloni is. Predicted this crash. You know, I will go on record as I pretty much predicted 87. This one, a lot of people were talking about a market top and those things, and I've been talking about that as well. But the way this thing hit, and sometimes it's one thing to predict it, it's something else to trade it. And so the only effort, the best time you could have done it was the Monday gap lower. The most likely period, if you're really paying attention, is where we took executions, which was the following Monday. And that was the point after that first week. That second week, if you missed that point, you were screwed. There was no way to get away from this thing because they've just relentlessly continued to see this thing decline. So like I said, so I don't know what we're going to wake up to in the morning, whether this market will recover and we won't be down 4% or what it's going to look like. And anyway, yeah, so let's see. Anybody ever watch Oscar Caraboni on YouTube? Haven't seen him. Yeah, and I'm a former floor trader at Chicago Board of Trade, Pacific Options Exchange. I've been around and seen a few craziness. In 87, I watched a good buddy of mine with about 14 million in his account go 4 million negative on Friday. This was Friday before the crash, so he was liquidating on Friday. It was a blessing because if he would have stayed in on Monday, they would have just shot him, I think. So let's see here. Yeah, it's interesting. Bill Clinton, Obama tried to change the rules so they could go in, and that's very interesting. Yeah. So, listen, this is a great conversation, folks. I wish we could all just be on the same line and talk. That'd be really a lot of fun. Maybe I should have done a Zoom video tonight instead of a live YouTube. But the bottom line is, what we're going to be dealing with is hard to predict, but I can tell you it's very, very large. This is not going to end in a pretty way, I don't think. Hopefully we wake up and this thing's recovered and the S&P is positive in the morning. That's a good thing. But I've been telling everybody to, anytime it's the old story, instead of buy the dips, it's sell the rips. So rallies are to be sold for a while when they happen. And I don't know if you folks are watching this tick by tick chart, but it really is. It will take you for a ride. So we're down 3.9 now. This feels like a big rally. I think some of this action we're about, I believe London opens at midnight West Coast time, about 3 a.m. New York time. So to me, that's going to be the mark. I'll definitely going to stay up tonight and watch that open. Yeah, I'm just reading some of the comments, folks. Yeah. Anyway, we've actually went up in numbers again. We got 11 on. Uh, this thing will post as soon as we finish. So if you want to go back and spin through some of the stuff, there's some pretty decent content. I think on this call there was a lot of things discussed. There's a lot of elements that are important. I'll probably not edit this because I'm actually tired after doing this. I'll probably maybe do a I'll do a detailed video tomorrow night that unpacks a lot of this stuff. I won't do a live show. I just felt like with what was going on, it'd be appropriate to do this. So now we're down 3.72%. So we're working on, I'm going to put this thing back on a 1 minute graph so it's not flopping all over. But you'll see the nice little rally here. And, like I said, who knows where it comes in. I would be thrilled to come in and the thing be unchanged on the futures in the morning. Doesn't look like that's what's going to happen. So tell you what, if anyone's got a really good question, throw it out there. Other than that, we'll call it quits here. And like I said, this video will actually post. And I don't know how live events post, but it'll be up there. I think within a few minutes, and you can go back and spin through some of the content. There's a few people that have just come on board here just recently. So it says, how does one go about trading this chart? Well, we could have done that. I actually did a trade earlier, made some money. Yeah, so just might as well give these guys a recommendation. This is TradeStation that we're looking at. And this is a customized page that, good night, Jake. This is a customized page that I built just for day trading. So it's got the order book. As you can see the size here, and then this is time and sales. And these are 1 minute graph. This is a proprietary indicator. It's first derivative PPM1. It's a momentum indicator. And this is a volume ratio I look at. And down here, these bars here are just telling you about liquidity. And the liquidity is kind of a joke. You can see in this little size box, it's 9x4. This is pretty typical at this time of night. But during the day, these things should be 300 by 400, 200 by 300. It should be hundreds of contracts. And in the daytime, we will see a bit of a increase, but not a lot. There's a little bit of size. That's the biggest issue just in closing with the markets here, is that there is no liquidity. And that's why we had that tick chart. It was just bouncing all over the place. Now we're down 366. So, this thing come back. We're only down 100. The low is 2607. We're now 39. Like I said, I think this thing's going to recover probably into London for the next couple hours. And then when London comes in and European markets open, we'll see, at that point, we'll see some reaction. So anyway, just want to, yeah, so Imbeck said, no, they need to completely implode everything so they can blame Trump bankrupting another company, or should we just say country now? Yeah. Well, yeah, I don't know. Yeah, I don't know. I run multiple companies, and when you run 400 companies, some of them aren't going to work. But the bottom line is they definitely want to blame this. This is all, in my opinion, this is about there are forces on this planet that would like to see, they would be willing to see everything collapse to get rid of Trump. That's for sure. That's for absolute sure. So anyway, folks, thank you so much. I really appreciate it. Make sure you subscribe. I'm going to be on here a lot because this is the best way to talk to people. We still help manage close to $15 billion in the market. So this is not for fun. and this is serious business that we do. And you know, we've been working with investment advisors for 22 years, and I've been doing this for 42 years. So it's it's really good. So anyway, listen, folks, have a great rest of your evening, or get a good night's rest. And I will be up sometime tomorrow, depending on what's going on. I think I just got to keep the dialogue going here. Just there's just too much, and hopefully I throw out a few good ideas there. So now we're down 360. We're still trying to recover. Anyway, good night, everyone. Thanks for watching.